Hey, everybody. Welcome to the FBI podcast. Today, we have a special guest. His name is Barry Ward from Ohio State University. He's going to do a deep dive into tax laws for post frame construction, specifically for the year 2022 and 2023.
My name is Barry Ward, and I've been with Ohio State University for roughly 30 years now, and most of my work has been uh, in and around farm management, farm business issues, and I've worked in this tax area for a number of years as well. My title is Leader of Production Business Management. I guess that's pretty generic, but it kind of encompasses a lot of things in farm management and business. And I'm also the director of our income tax schools. So we provide training for tax professionals, tax practitioners throughout the state of Ohio and those even surrounding states in some cases that uh, need continuing education credits and also would like to just keep a partnership with Ohio State. So, that's something that we continue to do year in and year out, and we're hopefully, and we pretty, we're on the cutting edge of most policy of what's going on in both federal and state tax.
All right, Barry. So, the first question that I want to ask you is, can a pole barn be a tax write off, and at what percent does that look like, specifically for 2022 and 2023?
Sure. Yeah, as long as we are defined as a business, so this is going to be fairly general, and there's lots and lots of detail and some specifics that and lots of exceptions to this discussion. But generally, if we have a business and we're defined as a business by the IRS by filing a Schedule F in the case of farmers, or a Schedule C in the case of other businesses, or Schedule E as a rental business, then generally we have the ability to write off or expense or depreciate, if you will, business purchases, and that includes buildings. So a lot of times we think of writing off equipment purchases in the farm setting. We're talking a lot about farm equipment, farm machinery, and farmers will do this each year. They're going to buy equipment as they rotate and upgrade equipment. And buildings and structures are no exception. If we're going to be buying and using a farm building or some kind of other structure like grain bins and storage and other things, then those can be written off, if you will, or depreciated. And that's an important part of tax management, is just understanding the business use of all this equipment and buildings that we're purchasing.
Awesome. Well, thanks so much for that. So, second question is, what is the difference between a single use structure and a general use structure, and how would you define that?
Sure. I guess I use structure and building somewhat interchangeably, but structure could also include other things. And I think in terms of grain bins, and they have a completely different um, useful life or recovery period, if we want to use the exact IRS and tax lingo. Um, so single purpose ag or horticultural structures, first of all, we kind of look at those and we're talking about buildings that are built for specific purpose. And examples would include greenhouse types of facilities, or buildings that were built specifically for uh, finishing out hogs or poultry and those types of things that have certain aspects of the engineering and the building as dedicated and laid out for that particular purpose. So a single purpose, and typically in my thinking, it's can be pretty simple. Now, some will try to. I know that there are at times when you know, tax folks, those of us that have to file taxes, we will try to fit a round peg into a square hole, so to speak, and that does happen, and sometimes it can be successful. But the IRS, if they were to scrutinize a particular building that you tried to pass off as a single purpose, and it wasn't strictly a single purpose facility, they would reclassify that into a general farm building, and that would come with some changes in the expensing and the ability to take depreciation on those buildings. Machine sheds, storage buildings, anything that has a general layout, general use, multiple uses where there may be some storage, a shop, those kinds of things, or we look at pole barns, for example, and those barns typically would fall into the class of just a general barn, and they would have a different useful life than those single purpose structures.
So, one basic question is, do tax laws change from year to year, or are those pretty static? How does that work from a government standpoint?
Yeah, we've had a lot of changes. We've had a lot of, we focus like right now on federal tax law, but we've had a lot of changes, especially through COVID, going all the way back to 2017 and the Tax Cuts and Jobs Act, which was pretty, well, it was a major change in tax policy in some regards. And then we've had, with all the COVID legislation that's passed through, and then the recent Inflation Reduction Act, that particular piece of legislation, there have been a lot of changes in tax law.
Awesome. Well, appreciate that, Barry. So, the next question is getting a little deeper onto the terms of depreciation and write offs for those who might not be familiar with those.
Well, depreciation and writing things off, if you will, most of the time, taxpayers, business owners, farm business owners, they're going to want to take that expense as quick as they can or write it off as quickly as they can in most situations. Now, there may be times when we have a year where we have very low income, very low gross income, and we don't need a lot of quote unquote write-offs or depreciation to manage our net income and tax related um, liability that goes along with that. So in that case, we might be fine with having that expense or that write-off not be as not take it all in that year or not take as much in that year. So what those two types of the two options we have with the modified accelerated cost recovery system, which is the long word for the IRS rules for depreciation for business assets. We have the general depreciation system and the alternative depreciation system. The alternative that just allows us to choose, if we want, a longer time period over which to depreciate that business asset. So, if we wanted, for example, on a farm building, the regular or the general depreciation system is 20 years, and that's what most people will choose. But we can also choose to make it 25 years or write it off over that 25-year period. It lengthens the time that we can take depreciation, a little piece of that depreciation each year. And for most people, well, they don't voluntarily choose to take the alternative, but it's an option.
Yeah. So, if we go a little bit deeper, what options do people have in regards to the write offs?
Well, we have two options, and there's one of them is now more or less um, permanent as far as the ability to take that write off, a big chunk of it in the year of purchase of that business asset, or and the other option is a moving target. So the first one, I think many people have heard of this that have a business, or maybe you've seen it in some article, but that's IRS Section 179 expensing. So a lot of times it's just called Section 179 expensing. It's a section of the tax code that lays out the process where we can take a write-off or expense a big chunk of our business purchases in the year of purchase or in that tax year. So presently, that is $1 million adjusted for inflation. So since that was passed, that's increased. So in the 2022 tax year, we could take Section 179 expensing on up to $1,080,000 of purchases. So in other words, we could write off that much in the year of purchase. Now, that only applies to certain classes of assets as defined by their recovery period is defined by the IRS. So we can use that on anything that's 10-year or less property or recovery period. So does not include general purpose barns, but it does include single purpose structures. So, and it's very flexible, that particular um, way to take depreciation or write off. The other option is bonus depreciation. This has more applicability for our general purpose buildings because we can take this bonus depreciation in the year of purchase in that tax year and take a big percentage of the purchase price, the acquisition price, and write it off or claim it as an expense on the year that purchase. So that does apply to general purpose, regular buildings, barns, and so on. So that this year is still 100%. Now that percentage changes over the next few years where it starts to get less and less all the way up to the end of 2026 now. But for now, at least, it's going to be 100% bonus depreciation. So this year, if we were to purchase a barn from you folks, for example, then we could write off the entire amount, 100%. Now, doesn't now offer as much flexibility. We have to take the full 100%. We can't take a portion of that, but does allow us to write off or expense a lot of that. And we know kind of in the Eastern Corn Belt, what we've seen at least, especially with crop producers, is year looks fairly profitable for most producers. So there's going to be some need in some cases to probably make some investments and find some expenses. So
Awesome. Thanks for breaking that down. So, is it ever too late to start taking depreciation? Is there kind of a deadline or a drop off when you have to do that? And how does that look?
uh, no, but they would be foregoing a certain amount of what they, because unfortunately, the IRS assumes that in the year of acquisition that you did start to take that depreciation, whether you took it or not. So, but you can still, this is something you need to talk to your tax practitioner to work out, but you can still take the remaining that still hasn't been depreciated or in the eyes of the IRS hasn't been depreciated. Yes.
So, as we get close to the end here, Barry, one of the last questions we'll ask you here is what does the future look like for bonus depreciation and will it drop in 2023 compared to 2022?
It's 80%. It goes down by 20% each year after this year. So I think it's 80% in 2023, and then 60, and then 40, and then 20, and then it sunsets at zero. And our expectation is that probably before that sunsets to zero, the Congress will act to probably reinstitute bonus depreciation or continue it, I guess. Um, but we'll see.
Well, fantastic. Thanks so much for going through all this. Any final thoughts that you want to add here, Barry?
Um, well, just know that depreciation is a fairly complex part of the tax law. So do a little of your own research, especially if you have unusual situations. Some things that you might need to pay attention to are sales or trades between related parties. There start to be special rules that come into play for related parties, but yeah, just do some background, talk to your tax preparer if you have a professional that assists you, and they'll certainly be a benefit to you in any tax year, especially if you have a business, but especially if you're uh, trading, buying, selling a lot of business assets. So just keep them in mind.